You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That not so rockin', more vol type tune means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network, back in the old Options Insider studios after a nice sojourn in the southern studio. So it's fun to be back, fun to be able to do the live streams, have the music in there, all the other fun stuff you guys have become accustomed to. And, of course, you can always check out all of our fun programming. Easiest place, the mothership, theoptionsinsider.com. While you're there, got a lot of great stories there, too. Articles, analysis, unusual activity, our Tesla tracker, breaking news on the options market, all that fun stuff. You can spend days just clicking through all that content. Go for it. I challenge you. Spend days. See what you can do. There's thousands, 10 years worth of stuff up there. So you could literally spend years probably going through all of that content. So get over there now. You got to get started. You got a lot to dig through ahead of you. Of course, if you want to mainline the audio straight into your ear holes, iTunes, TuneIn, Stitcher, as well as, of course, via our podcast app, available for all of the major platforms. Cool things about the app, you can download stuff. Obviously, you can do other players too. You can also build playlists. And also, you got our contact info baked in there. So if you're listening to a show, you're like, I really disagree with that meatball character. He's kind of a whack job. I want to let him know that. You can hit the button right there and do that. Or if you say, that Mr. Rhodes, he's a bit wonky for my taste, you can share those pearls of wisdom with us here on the show. Of course, hit us up on all the usual outlets as well as social medias and whatnot and so on and so forth. Of course, you can always join us live every Friday, noon Central, 1 p.m. Eastern, via Mixlr, Mixlr, and you can join the fun there as well. Speaking of joining the fun, let's see who's joining me for some volatility fun today. Let's go in order of how they pop up on my screen here. Let's start with the greasiest of meatballs. I haven't had lunch yet, so it'll make me want a meatball sub now. Mr. Mark Sebastian from OptionPit.com by way of a little place called Carmen Line. Mr. Meatball, welcome back to the program, sir.
Hey, how are we? Good to see everybody.
We are good. Using the royal we today, are we? We are good. I'm going to start using that. We are fine.
I'm a happy camper. Let's just put it that way. All is good.
The rest of the show, I'm going to use that. We are good. We agree. All right. And joining we on the program today, I believe enjoying his extensive sabbatical. You know him. That means he's just sitting there just sorting through myriad VIX charts and data points. Mr. Russell Rhodes, the major domo of all things education and pretty much everything else over there. His title is changing on a pretty much weekly basis over there. Hard to keep up with it. Let's just call him the go-to man for all things SIBO. Mr. Rhodes, welcome back to the program, sir.
I'm just thrilled to be here. I wish I could jump through my iPhone and strangle whoever just forced me to upgrade my Skype.
Oh, those jerks.
Yeah. You know, I want my money back. It's free, so I guess I can't really complain. But
those last-minute Skype updates.
I'm struggling over here with my Skype, guys, so a little bit of patience, and I can't see the internal chat, so don't talk bad about me.
Oh, that means we are free, open season on Mr. Rhodes. We shall henceforth do so while we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is indeed the portion of the show where we do exactly what it says. We break down the week that was, my vol trading, analysis, and all sorts of fun perspectives. Yes, Mark, you created a monster. I'm going to be using this royal we all throughout the show, so just get used to it. Become accustomed to it now. Make your life a lot easier. But an interesting week it was. Pretty much the narrative for the better part of this year has been, whither the vol? Where is my VIX? Where can I get some juice? How far do I have to go? What sort of lengths do I need to go to find myself some juice? And this week, you got a little bit of juice, courtesy of a couple of different factors. One crazy guy out there rattling his missiles over there in North Korea certainly did help, as well as, of course, we had the non-farms this morning. All that leading up to a healthy, shall we say, increase. I guess it depends which side of the fence you're on. If you're on, as the journal called it, that volatility feedback loop, aggressively short vol, then perhaps not so much. But a little bit of a rise, a little bit of some juice. We got as high as about 1305, I believe, this week was the high on this kind of truncated holiday week. Of course, we had the July 4th holiday here in the States, so that meant Monday the 3rd was a half day, and then Tuesday we were all off eating hot dogs and shooting off fireworks and everything, so all that fun stuff. So a little bit of a truncated week, but still some interesting stuff. And of course, this morning we had the number coming out, and decent number, markets rallying. And as a result of the number going away and the markets rallying, we're seeing a lot of that juice that came in earlier the week kind of heading the way out the door. Yesterday at this time, we were about 12.5 right now. It's about 11.5 in the VIX cash, so off another point already today. So squeezing whatever juice there was out there. What did you say, I think, on the show last week, Russell? You said if there is a VIX pop, it's evolved to the point now we have to sell it within minutes. Now you can't even wait hours or indeed days like you used to be able to because it's gone. We had about a session or so to sell it this time, but not too long. And certainly that 13 print didn't hang around too long. But let's start there. You've had a lot of time to really watch all the ebbs and flows of vol this week. Mr. Rhodes, what caught your eye in this somewhat interesting week from a vol perspective?
VIX up around 1150, regardless of what's going on in the stock market's kind of nice to see. I wonder if we're getting a little bit of extra premium based on geopolitical concerns. As you mentioned, Tubby over there in North Korea had his own little fireworks show where he basically launched a hunk of metal into the ocean and said, "That's exactly where I meant for it to go." But I think that I think that's going to add a little bit of a premium or a little bit of concern to the overall markets now. Otherwise, it's been somewhat of an unexciting week, I guess.
Yeah, I guess again it depends. Well, of course, the beginning of the week was quiet because everything was closed. But outside of that, yeah, you're right. A little bit of saber rattling. What did we say yesterday on the option block? A little bit of nukes equals some juice, and saber rattling. Anything on the ICBM front or the nuke front tends to get people a little concerned, and hence a little bit of juice out there in the street. But again, short-lived as always. So we still are, as Russell pointed out, we still are at a market premium to where we were a week or two ago. We were flirting with the mid-9 handles, so a couple of handles higher. So still elevated, all things considered. And of course, the S&P is actually moving a bit, so perhaps warranted out there. Mr. Meatball, we shall turn to you now. What make you, sir, of this crazy week of giving some juice and then taking it away again forthwith?
Yeah, it's nice to see some actual realized volatility. Believe it or not, 10-day vol over 9%. Just craziness abounds in terms of volatility because we've actually got some real bars. We were down almost 1% yesterday. We're up 0.75% today. We had that crazy day on the 29th. So there's actually things happening. Things are starting to move a little bit. Volumes are light, so it's easy to push things around. And there's some risk on the table. It's interesting. I hate to say like 12.5 VIX is like something to talk about, but 12.5 VIX. That's a level that where volatility is still low, but maybe we're done with the single digits for a little while with, the economy in flux, the Fed is in flux. We've got bonds which had gotten super bid are now off. So I think that the market movement has really been tied to would the economy be able to keep up with the Fed language? And then the jobs report that came out today was extremely bullish. It was really good news. And with the Fed taking money off the table, then that's the kind of news that we actually need. So, it's just kind of interesting. Maybe, I know everybody wants to dump volatility, but we've got another Fed meeting in July. That's probably nothing. We do have some geopolitical stuff. I think the North Korea stuff is a little offsetting. But I think this is very economic-y centric. And then we're going to be heading into earnings in a couple of weeks. So that could keep vol a little bit higher. So that'll be interesting.
Yeah, certainly some interesting stuff to watch this week. You mentioned the futures. They have been kind of moving as the cash. That slope evolves as the cash has been moving quite a bit. We are seeing VVIX have a little bit of life. It was back around the 100 level right now, hovering a little bit shy of that, about 94 or so out there, but still well above. It's about 75 or so floor where it usually has been hanging out of late. So things are moving. Things are rocking and rolling out there. And of course out there, while this cash movement means that front portion of the curve is getting all sorts of fun juice out there. It was, as of going into last night, it was about a half a point between the front month and the cash, and about not even a point 2 months out, about 0.8 of a handle between the cash and 2 months now. Of course, with the cash just getting crushed today, I guess that's expanded about a little over a point, about a point and a quarter for the front month, and about 1.6 or so for 2 months out there. Speaking of the futures, OCC putting out their numbers, and then we talked about those on the option block yesterday in terms of volume numbers. June, a decent month for options volume, but they put out a little nugget that we don't talk about a lot, but makes sense to talk about here. They put out their cleared futures volume in June, reaching yet another milestone, almost 13.2 million contracts, a 16% increase from June of last year, and their ADV for futures volume is up 44%, so over 500,000 contracts, 557,000 contracts a day so far this year. So that's pretty rocking and rolling numbers. And Mr. Rhodes, correct me if I'm wrong, I think we talked about this before, but pretty much 99.9% of that is VIX, is it not?
A huge chunk of it's VIX, and I believe that the second quarter was the highest average daily volume we've seen out of VIX futures ever. And I think the month of June was the second highest ever. So, those two things are joined at the hip. And of course, what's really interesting about all that is the continued growth when VIX is low. Can you imagine what's going to happen if VIX starts to really get going?
Yeah, that's the weird part of the story. I mean, everyone's been wringing their hands for 6 months now about where is this vol, and yet the numbers are lighting it up. Some of that probably goes back to reinforce that notion that everyone and their mother seems to have awakened to this fact. In fact, we got an article we'll talk about in a minute, talking about mom and pop getting into the short vol trade. I think you were talking about that a week or two ago on the show as well, Mark. So it seems like everyone and their mother is collectively waking up to this trade, and the VIX being anemic is no deterrent on that front. They want to just come in and they're slinging them because clearly 16%. That's no small amount, and even with who would have thought with the vol this anemic for so long, hitting single digits multiple times and staying there for the better part of a week sometimes, we would see this amount of an increase in the futures volume. It's pretty surprising. Speaking of surprising, we kind of alluded to this on the show last week, but it's getting a lot of ink out there in the world these days, so we want to bring it up. Of course, one of Mark's favorites, and I know a lot of you guys out there as well, favorite inverse shorting mechanisms for vol, of course, good old XIV. There's a big write-up. I think this was coming out of Business Insider. They were talking about a big spike happened a couple of weeks ago out there in XIV. Record trading volume for that product, 3.3 billion contracts out there changing hands or shares, I should say, of the underlying ETF. Huge amounts of volume, kind of the biggest day they pretty much have had on record. Of course, XIV is indeed that short vol product out there, and so this kind of gets back to what you were alluding to before, Mark, that this trade is really getting out there and perhaps even maybe getting a little bit out of hand. In fact, I think they even mentioned in this article, they quote a couple people, this one guy who is this guy from a firm called MRA. I'm not familiar with them. He says this trend is pointing to perhaps the growing interest in shorting volatility among retail and others who are not specialists in volatility trading. We have another guy later, I think in the same article, uses that same term of the, they attribute it to the popularity to the participation of mom and pop investors. So this data point is not enough, I don't know. But this kind of gets back to what you were saying a couple of weeks ago, Mark, on the show here, that, everyone, including literally maybe your grandma, is starting to get in on this trade. So what do you think about this huge data point? Is this just confirming your hypothesis that everyone and their mother is now short vol, and what does that mean for us going forward?
Well, not everybody and their mother. There's still a lot of people that need to own VIX Premium, but I think what we've seen is as lots of people are at XIV and lots of people are in short VXX or VMIN or some of the other different names. And that open interest gets bigger and bigger and bigger. That changes kind of how VIX is going to move. So, Russell, you can maybe talk about this too with us, but there's an important trade called the trade at settle. All right, and trade at settlement. So, some of the ETNs and ETFs actually have to carry the positions. Some do not, but even the ones that do not still like to have a lot of VIX futures on hand, or to have on the right position on hand. And when we see these big spikes in VIX, they don't like getting jerked around. They don't want to have fears of execution. They'd rather just kind of get the whole trade done in one print at one price, as close to settlement as they can. And that's called a TAS trade, or the trade at settlement. And everybody knows how these TAS trades go. And there's actually a ticker for the TAS on all the different, on many of the different futures trading products, and even on like TD and some of the other ones like that. And you can actually see how the trade at settlement is moved, and everyone kind of knows the positions of the different ETNs. So as VIX rises, the amount of futures contracts they need to trade moves around. And so you'll see some demand as people trade around and prepare and make offers into the TAS. That will actually move VIX and VIX futures around significantly. So one of the things that exacerbated things on the 29th was that that trade at settlement trading around it, as market makers and traders tried to provide and manage liquidity for these ETNs. And another thing is, there's a lot of people that are short vol that want to get out of the way quickly because they don't quite know what they're doing. So I'm not sure it's the mom and pop effect as much as it is the mom and pops in investing in things like XIV and short VXX that are then creating this settlement trade that then creates a surge in demand midday as traders prepare to provide liquidity. I don't know, Russell, if you want to add anything to that, but kind of you might want to. I think you might have some decent insight into this.
Well, no, you said that the trade at settlement moves VIX around.
It moves the VIX futures around, not
right,
VIX.
You said. Well, I want clarity here because this is something that I bang my head against the wall.
Right, VIX futures
trying to explain to people. Yeah, well, you said VIX and VIX futures. I knew exactly what you meant.
Yeah,
but the VIX futures activity does not influence VIX, for God's sake.
Well, initially,
and I'm not yelling at you.
Yeah,
it's the whole world. I'm very tired of fighting that one.
There is a correlation trade there. I mean, if there is a surge in demand in VIX futures, you generally will see VIX go up. Because people try and arbitrage that, there is you can execute, if VIX futures go up too much, you can execute a cash trade in SPX where you can essentially recreate a variance swap that will let you arbitrage VIX futures versus the variance trade. So there is a correlation there. They're not tied, right? VIX futures can go up marginally without moving VIX. If VIX futures really move, VIX almost inherently has to rally.
I've never seen a case of VIX futures leading VIX.
I mean, generally speaking, no. But you can see scenarios where the tail does wag the dog a little bit. Nothing huge, but generally speaking, but the other piece is that rally in VIX then causes the TAS trade to move, which then creates demand in VIX futures, which then people look at that and they go out and buy more SPX options, and that pushes VIX higher. So it's kind of a circular trade. But yeah, the VIX cash is absolutely the dog to the VIX futures tail. But every now and again, there can be a little tail wagging the dog, a little bit.
A little bit tail wagging the dog. Speaking of wagging stuff, let's get right into wagging down some, that's a stretch metaphor, dragging down some weekly VIX action. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Mr. Rhodes, you know the drill. The rest of you may not. This is, of course, the portion of the show where Russell pontificates at length, 30 to 40 minutes at least, about all of the intricate minutia he saw going up in the world of VIX weekly options. Sir, have at it. The floor is yours. This is, of course, the portion of the show where you speak, sir. Uh-oh, did he lose his Skype again? Is Skype fighting back against him? Did we lose him for Russell's Weekly Rundown? This is the portion of the show where we actually need you, Russell.
Here we go.
There we go.
I was yelling and screaming. I swear to God.
Third time's the charm.
Is Skype, they're part of Microsoft now, right?
Yep. $8 billion they paid for this superb piece of technology.
That explains it. So, I got to push like 6 buttons to unmute myself. So, and what I really wanted to say is I want to go back to fighting with Mark, but I'm not going to do that. So I did come. There was some okay weekly activity. It was all call sellers, which is kind of interesting because when these things came out and all of a sudden you have the ability to be very strategic with respect to maybe trying to catch a volatility spike. You would think that maybe somebody's targeting concerns over earnings or the August employment number, since we just got July passed behind us, or things like that, and taking long volatility positions that would give you the most bang for your buck, because the beta between the near-dated VIX futures and spot VIX runs at about 0.8, 0.9. However, none of those trades occurred this week. Some of that could be attributed to it being holiday week. We don't have anything fun coming up, especially after we got employment today, or anything that we're aware of. If anybody knows when Kim's going to throw another piece of metal into the Sea of Japan, then maybe they can trade around that. But I don't think anybody can figure out what that guy wants to do. So on Monday, although it was kind of a quiet and really somewhat of a holiday-like day, somebody did sell over 10,000 of the July 12th 20 calls and took in a dime. They did it over the course of the day in a few blocks. And I had Tuesday written down here. There were no VIX trades on Tuesday. Wednesday we had somebody sell some of the 21 calls, about 2,000 or so, that also expired on July 12th, and took in a dime for those. Also, somebody went out to August 2nd. I can't believe we're already talking about August. They sold a few thousand of the 15 calls at 73 cents. None of these things were done as spreads. So sell calls at your own peril. There was a seller of about 3,000 of the August 9th 17 calls for 70 cents on Thursday. And then today, I've seen somebody sell about 2,200 of the August 9th 15 calls for 90 cents. Excuse me.
Wow.
And another seller of the July 12th 12 calls. That note can't be right. I think that should be 21 calls at 15 cents as well. So, but every single decent size weekly trade that I came across, and normally I kind of pick and choose. Guys, I named them all for this week. Yeah, I mean, there was one calendar spread that I couldn't figure out what they were doing, where they were selling some puts and buying some longer dated calls in a weird type spread. And I could not for the life of me figure out what the thinking was behind it. So I didn't bring it up until now. But they're still getting used. We're still seeing improving volume depending on what's going on. And, there are people that are getting size trades executed in the non-standard VIX expirations, and they're happy enough with the prices to do those trades.
Yes, the weeklies are open for size upside selling. Every VIX product is pretty much there just to sell yourself some VIX. Have at it if you haven't. Your grandma's doing it. Why don't you get in on the action as well? Moving on over to the mothership, the big VIX options. As Russell alluded to, a bit of a quiet week. That happens when you have one day off and a half day before it. Kind of tends to put a damper on the week. Of course, our friend over there in North Korea doing his darndest to try to juice up those numbers. Today's non-farms giving a little bit of life, but not really sparking a ton of volume today. Just 100 contracts shy of 300,000 contracts on the tape right now, about halfway through the show, and I'm a little more than halfway through the session. So it seems like it's going to be another light day. The ADV right now hovering around 692,000 contracts. Doesn't seem like they're going to put that up today. Didn't pretty much put it up at all this week. 570 yesterday, 509 on Wednesday. Tuesday, of course, a big whopping goose egg, and Monday, 190,000 contracts. Not bad for a half day, but pretty light nonetheless. And of course, that call to put hovering in, getting close to the red zone where Mr. Rhodes gets really nervous. 3.9 to 1. It was in 4.1. It has backed off a little bit, so Russell can breathe a sigh of relief. I know he watches that indicator on a daily basis and sweats it the second it gets above 3. So we've been hovering above 3 for about a month now, so he's been very nervous. So send him some tweets to that regard and poke him a little bit. It's always fun to poke the bear. Speaking of fun stuff, let's break down the hot VIX action, the hot VIX strikes. I like asking Mr. Meatball sometimes what he thinks is the VXX number one strike. I know he won't read the notes, so he won't cheat. So, Mr. Meatball, we're going to start off with you. We're going to play a different game this week. I'm going to have you guess what you think is the number one with the bullet VIX options position right now for this week.
What is the number one VIX options position for the week? I'm going to go out on a limb, and I'm going to say the July 20 calls.
Did you actually look at the notes for the first time in your life?
No, I just know that if I was a hedger, I'd want to own the 20 calls.
Well, there you go. You actually got it this time. Well done. July 20's 325,000, number one with a bullet, followed hot on its heels by the July 25's, number two, 320,000 contracts out there as well. So some hot upside July VIX action going on out there. AUG, not to be forgotten. AUG hot and heavy. 300,000 of the AUG 20s lighting it up so far this week. Number 4, the July 35s. Used to be number 1 with a bullet. They were hovering right around number 1, number 2. Now seems like 20 and 25 is the new 30 and 35. 35's down to number 4. 263,000 contracts open there. Number 5, shy a $250,000, about 225,000 of the July 18s. We got a nice little juicy July call strip here. Number 6, 224,000 of the July 15s. Number 7, 197, so under 200,000 now, of the July 17s. Number 8, the July 21s, a nice $1.90 open over there. Actually, swap those. The July 30s should be one ahead of those with 194,000, so they're actually number 8 for the July 30s, 194,000. Number 9 are the July 21s, 190, and rounding out the top 10 are the AUG 25. So 25 is the new 35 these days. 186,000 contracts open there. Total decent OI, about 8.8 million open, about 7 million on the calls, about 1.8 million on the old puts. Russell outlined a few interesting trades that were going up in the weeklies. There were some interesting trades going up. We were talking about the AUG doubles, I believe, a week or two ago, but I think it was last week. Paper blasting out a bunch of those. We saw the AUG 50s trading this week, yesterday, about 1,600 trading for between a nickel and 6 cents. They went up on a couple on or near the bid a few times there. OC 29s, also some interesting upside, about 13,000 going up for 54 cents there also. On the bid side, but more pretty much near mid-market, as most of these big prints are going up out there in VIX land. So those funky, way out there strikes, in August in particular, August seems to be the weird one where we're seeing a lot of AUG funky upside. Maybe August is the new February where the weird upside trades start lurking. I don't know, maybe we need to readjust our calendar. We always look for those in February. Maybe August is the new time. August also always a historically quiet time for vol. I don't know why that gets you into the 50 or 55 strikes. Maybe they see that's a pretty safe bet. Either way, weird stuff. Mark, did you notice these trades and any other ones catching your radar this week out there in the big mothership VIX options, sir?
Yeah, there was a decent 1 by 1.5 that went up this week that I saw in August. They were doing the 1924 1 by 1.5. That was pretty big. There was a big this is kind of interesting. The guy did the 16, 20, 30 butterfly for 3 cents, sold it and reference against 1230. Big buyer of the July 35 calls, paid 3 cents, did a ginormous amount, and we've seen the marvelous return of the risk reversal. We saw a big sell of the 11.5 21 risk reversal. I also saw a 11 put versus 16 20 call spread go up. Here's a fun calendar. Somebody sold the July 27, October 29 call spread at 44 cents. So they bought July, sold October, and collected 44 cents. That went up like 4,000 times. That's a kind of a fun one. I like that one a little bit. That's, I believe, the biggest ones I've seen. We have not seen our friend Fitty in. I think he's got a pretty robust position right now, so I think he's happy. But that is what I've seen.
I like that, the old VIX risk reversals. And we always talked a lot of ratio verticals and things. We don't talk a lot of risk reversals. Nice to see some risk reversal juice coming up, but probably because a lot of the puts don't get a lot of life. At least they haven't until recently out there in VIX land. Still, VIX started flirting, shy of the 10 handle. All of a sudden, the puts had some juice. But prior to that, there wasn't really a lot of meat on those bones. So selling those puts to finance the calls wasn't perhaps the most attractive trade. It wasn't like the indexes where the put's going to be the juicy leg and going to get a nice credit for doing that. You're going to end up paying for that in VIX land. So I can see why it hasn't been the most attractive of trades, but maybe now with some of these puts getting a little bit of life, the risk reversal maybe will get a little bit of life. One thing we haven't seen a lot of is our old 1x2 friends lurking out there. So maybe that trade is on the sidelines for a little bit out there. Mr. Rhodes, anything else in VIX options before we move on, sir?
No, I think we have beaten that horse.
Speaking of horses that need some beating, talking about other volatility issues, we'd be remiss if we didn't talk about all things just single name vol these days is lighting it up. In particular, our good old friend Tesla, lighting it up, and just NASDAQ in general. NASDAQ has been lighting it up. We saw some articles, I think the Journal had some write-ups, Investopedia, piling in on that and writing up their own version of that, and others writing about this divergence we've been seeing out there. We don't talk a lot on the show, really, about VXN. VXN is, of course, the volatility, the VIX of the NASDAQ, and it's always at a nice little premium, but these days it's pretty juicy. It was about 17 this morning, where the VIX cash was hovering around 11.5. So pretty rich premium out there. And they were noting that in a lot of areas out there, and that a lot of this coming from some of these crazy names. You got your Teslas and others juicing up the marketplace a little bit. We have it here. What is Tesla 30-day vol? 52. And 30-day historical, actually delivering some vol of about 43.5. So if you're looking for vol, some of the single names have been delivering it of late. But they kind of point out, the journal and others kind of pointing out this growing divergence between VXN and good old VIX. It was at about 1.7 at the time this article came out, which was close to the highest level it had hit in about 10 years, again, looking at historical data. And so, past is usually prologue. Ask long-term capital if that's always true. The answer is no. But usually it is. And when it is, these relationships tend to come back into line. So that leads one to surmise that either the cash is going to get a little bit of juice, which it certainly did this week, or we're going to see ye old VIX of NASDAQ probably take it on the chin a little bit. So, Mr. Rhodes, you like to watch all the interrelationships between these various indices. What do you think about this growing disassociation between the VXN and VIX, and which leg do you think is going to make the move back eventually?
Eventually, VXN will, but it's going to be in about 3 weeks or so, because VXN is the only broad-based volatility index that does get influenced by earnings season. Now, it's already started to make its move a little bit earlier than it normally does, and that's because what's been going on in some of the big NASDAQ stocks. But when we had VXN futures, I actually wrote a white paper about trading the seasonality around that, because VXN would widen out, and then it would come back. Typically, it would probably peak out, I don't know, about the third week of each of the earnings months, which are April, July, October, and January. So there's going to be some seasonality that's going to keep it elevated, but it will come back in line. It's just, I guess one way to look at it is it has adjusted early for earnings. And we've got volatility indexes on 3 of the 5 FANG stocks, Amazon, Apple, and Google. And I'm going to do this again, I tweeted, I think over the weekend, a chart showing those 3 volatility indexes versus VIX, and you can sort of see the moves that start to occur going into earnings, and how this move that we're experiencing right now is very similar to what we've seen in the past. It's just a little bit earlier and a little bit more accentuated than we've seen in the past because of the price action in the big tech stocks.
Yeah, it has been interesting to watch. You, of course, mentioned a couple weeks ago that aggressive sell-off started happening right in the middle of the show, right about now, about 2 weeks ago or so, or maybe 3, where we saw NASDAQ suddenly just taking it on the chin towards the latter portion of the show. That, of course, contributing to a little bit of juice out there and some of this disassociation. Of course, as Russell alluded to, also see earnings playing a factor, as well as some of these tech names actually moving a bit, which is kind of interesting. Mr. Meatball, I know you like trading some of these disassociations every now and then. Has this VXN VIX spread come on your radar, and what are your thoughts here?
Yeah, this would be one of those times where I wish the VXN futures were still listed, because there would be a trade there. I think that the spread was much wider a few weeks ago. It's tightened up to 5.5 points. It was over 8 for a little bit. And I do think that you'll see them start to kind of come together. I think, VIX will hang in between 11 and 12 going forward, and I think you'll see the VXN maybe ease back below 16. I think we'll look for VXN to actually get below the RVX. That's how crazy NASDAQ has been, is VXN's above RVX. Russell maybe can give you some disassociation stuff there, but I think you'll see VXN get back to the 15s here probably next week would be my bet.
One of the fun things about looking at all this, the broad writing about all these different things about volatility and the broad interest in this growing disassociation between NASDAQ vol and S&P vol, is that you discover interesting things. We talked on the show a couple weeks ago. I think someone had a listener question about the kind of just myriad, the legion of alternate VIXs that are out there. Everyone has their own measure, their way, how many months out to buy a put versus a call, and vice versa, and this ratio, and somehow some sort of proprietary flavor, their own version of VIX. Usually it's restricted to other trading houses out there and research houses who like to have their own little brand that they could market and sell to their clients and show how good they are in the volatility space. But apparently I didn't realize this. Investopedia has their own VIX. What do they call it? They call it the Investopedia Anxiety Index. Proprietary to them, obviously, and it's got a little bit, shall we say, of a murkier definition. They measure Investopedia's readers' interest in topics associated with investor anxiety. So a pretty broad mandate there, shall we say? But they tweeted out, put out a little chart here of how it moves in with VIX, and it actually does seem to associate with that. I'd imagine a lion's share of that is because they probably look at how many people are looking at articles that have VIX in them. That's probably how they do it. So it's probably more of an index of how many people are reading articles about VIX versus VIX moving, which tends to probably spike in unison, but still interesting stuff. So there we go, Russell, yet another indicator for you to add to your ever-increasing arsenal of data points. Does that excite you?
I'm overwhelmed.
You are easily overwhelmed these days. So I wanted to just bring that up.
Help.
All of you asking about various and sundry ways to look at vol, then you too can play along with the Investopedia Anxiety Index. Maybe that's the capper. When we've hit that level of myriad quote unquote clone VIXs, maybe that's the contrarian mark that we've hit the high water mark. Talking about vol out in some of the other areas as well, the commodities have been an interesting one to watch of late. Of course, our friends crude having some fun. This is what the first time in how many years I forgot where July 4th gasoline prices actually cheaper than they were January 1st. So it doesn't happen too often. Summer driving season, we see cheap gas, and a lot of that is commensurate to the sell-off we saw out there in crude. Crude vol getting a little bit of a juice this week as well, still hovering in the low 30s, not back down in the 20s. Actually up about a point out there in OIV today, which is, of course, the VIX of WTI. OVX at a similar level. That's, of course, the VIX of our old friend, the much maligned, much loved USO. If you want to get more into all the commodity juice and the ball and the skew, stay tuned. In about 45 minutes, we'll be back with TWIFO this week in futures options. We'll get into all that fun stuff of the crude oil skew and everything else in a little while. Meanwhile, though, I think it's time for the inmates to take a hold of the asylum. It is time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the volatility voicemail. I'm just looking. If you don't follow Mr. Rhodes over there on Twitter, I love when he has some time in the little intervening sections here of the show to tweet out some great things. He's got the literal grandmother being run over by the volatility reindeer here. So follow him there. We'll retweet it for you if you don't. He's got some time to do some Photoshop over there on the old Twitters. Of course, this is indeed the portion of the show where you guys tell us what you want to talk about. We also ask you guys some questions every now and then. We asked you guys last week, this one kind of surprised me. We asked you guys, what are some of your favorite ways to get some nice long, aka bullish exposure to the underlying, to stocks and to futures? It's a great use case for options. What's your favorite way to do it? So we gave you the choices of long call or call spread, short put or put spread, stock/future replacement, or the old bullish risk reversal, one of my old personal favorites. I thought for sure, given our hardcore audience, it'd be leaning dark side, short put or put spread. But at the end of the day, the long call/call spread winning with exactly half of the vote, 50%, a quarter, a little bit less, saying 23% saying short puts, only 14% coming in for the risk reversal, and 13% saying the old stock/future replacement. This week, Mr. Rhodes, in honor of you guys over there at the SIBO announcing you're going to list the name that everyone's talking about this week, good old Apron, going to list options on Monday. In honor of that, we thought we'd ask you guys. Let's pretend the options were listed now. Has not exactly been a good week for Blue Apron. You guys know it IPO'd earlier this week. They had already adjusted down to $10, and then it couldn't even hold that level. It's off over, I believe, over 20%. I'll have to pull up where it is right now from that IPO price. So not exactly a banner week for Blue Apron. We said, hey, if options existed right now, let's go out a little bit. Let's not do it next week or next month. Let's go out all the way out to the end of 2017 to DEES. Let's say right now options are listed, and we'll give you some nice easy prices, $1. So if the stock was trading right around $9 when we put this out, would you buy that DEES 10 call for $1? Would you buy the DEES 9 put for $1? Would you turn around and sell that DEES 10 call for a nice $1, or would you say the heck with it? I'm not touching these Apron options, which hopefully isn't, because that isn't a good sign for Monday's listing. That said, Mr. Rhodes, we'll let you go first. What is your vote, and what do you think our listeners are coming in for?
I think they're all risk takers, so they want to sell those 10 calls.
Interesting.
As opposed to stepping away and not doing anything. I feel like they're going to want to do something, and that one is probably the one that makes the most sense.
Interesting. Mr. Meatball, same question for you, sir. Where are you falling on this one?
All right, so considering Blue Apron is $7.77, I would want to buy the 9 put for $1.
Yeah, that's a good trade. Maybe we should disallow that one for the rest of the week.
I'll do that one.
I'll do that all day, please.
I'll buy 15,000 of those. What's the position limit rule?
That's what we get for having the underlying move another 20% since we posted the thing. That's hilarious. All right, I'll give you that one. So far, a lot of votes pouring in. The lion's share not getting into the call put parity out there. They're saying, no, we want to not touch Apron at all. 46% not touching Apron. Only 27% wanting to buy that now underpriced DEES 9 put. 16% saying they want to buy the DEES 10 call still for $1. I think Mr. Meatball will sell you those as well. Buy one, sell the other, get a nice little bearish risk reversal, and do it for some nice dollars. And then 11% saying they're going to sell the DEES 10 call. This expires pretty much today. So if you haven't voted, get in there soon. A lot of you already have. Make your voices heard. Speaking of mute buttons, I was joking to you before, Mr. Rhodes, about how you can't find your mute button. I believe one of our listeners out there tweeting, spoiler alert, he did find it. Yes, it was Saqib over there. I believe that, I think it's at Bloomberg. So he's obviously listening. Excited that you found your mute button again there, Mr. Rhodes. So there we go. We got a question here now from Avery Thompkins. He says, I heard you guys debating a theoretical low for VIX. We did this probably a couple of months ago on the show. I think we all came in around 5 being kind of a nice, I guess you can call it a structural level of volatility in the marketplace. Kind of hard to foresee it getting much below that without some really weird, aberrant, crazy town thing. That said, Mr. Rhodes, I think you're going to try to run some numbers, try to set all the bids and offers to zero out there in the SPX and see what print that came up with. I'm not sure if you ever were able to get that off. It sounded like a fun thought experiment, even if maybe the folks at SIBO might be reticent to accommodate you on that front. But Avery asking here, that makes sense. He's down with the 5 level. What about the other side? How high can it get? Is 1,000 in the conversation? 1,000 VIX. That would be something. That might get to the level of, that old joke of, people selling 100 puts in the SPX and saying, who the hell cares? Because if we ever get down there, we'll have a lot more things to worry about, the zombie apocalypse, than that come into fruition. I think a VIX of 1,000 may be in a similar level. If we ever, theoretically, improbable as it may be, ever get there, there'll be a lot of other things cooking than I think the VIX come and do. That said, Mr. Rhodes, you live with this stuff day after day. You probably have crunched this number already. What to you is the theoretical upper band of VIX out there? I mean, obviously we know there is no real limit, but practically, how high do you think it can get?
Well, intraday in 1987, when it was based on OEX, we got up to around 130, I believe. So that's not a theoretical, but that's a historical. I came out of my office, and I'm actually standing on the putting green at the Options Institute right now, and I'm looking for, there's Lauren. Lauren, we're live on the air. Oh. Have you finished the spreadsheet of how to calculate VIX? Speaking to this microphone.
I have.
All right. Well, Lauren has finished. There you go. And
Good job,
therefore, Lauren and I are going to spend all weekend figuring out the theoretical potential low and the theoretical potential high for VIX.
Oh,
She's
that'll
up
be
for
fun.
it. Yep, that's
I'm in.
Summer in the city. So we're going to do the work on that, and we're going to report back to you guys. How's
I like
that?
it. See, look at this, listeners. Ask and you shall receive.
You guys know I'm a man of action.
You are.
So plus
You're a
I
man of
busted her goofing off at her desk.
You're also a man of
So
constant sorrow.
Yeah.
I like how you got your mic. You got your mic in roving mode. We should get a nice tour of the Options Institute there. Maybe a nice virtual tour of the SIBO. We should go find the proverbial grandmother who's in a class. Who's in a class right now?
And start talking to people.
Yeah, we should go to a class. See if you can find a nice proverbial grandmother who wants to learn about volatility there, and ask her if she's shorting the VIX right now, and then we'll have her answer to our question.
I don't know if we've got any grandmas around
Is
here.
your grandmother shorting VIX?
You want me to call my mother-in-law? She would love that.
Oh,
all right.
Oh, here's a question. Here's a question. Actually, I think this came from Henry. I'm not sure if this came in live right now or what it is, but this is exactly what you were talking about, Russell. Henry, I think asking by the live chat. Henry Schwartz over there at Trade Alert. He said, Russell, any progress on your creating your VIX calculation spreadsheet? So there you go. You got your update. He wanted to know. I think we were talking about that out at OIC about a month or two ago. So there you go. He is getting his update. All sorts of good stuff. So stay tuned for that, listeners. A nice little, all you guys who have these questions about the theoretical lows and highs, how low can VIX actually get? How high can it actually get? We'll hopefully have the data points for you, maybe even on Monday. So there you go. That's why I love the show. Ask and you shall literally receive, or perhaps literally in a few days, receive the actual answers to your question. What else we got here? Oh, Safari Dad just chiming in saying, a day without volatility is a day without sunshine. Well, you've been in the clouds for the better part then of 2017, Mr. Safari Dad. Hopefully this week has put out about a little bit of sunshine to your life. I'm sure Mr. Meatball will probably agree with you there. A question from our old buddy Don Schlesinger, my former co-host on the show. He wrote in, he said, Mark, on your vol review page on the site, he asked, there's a bunch of numbers there talking about the VIX futures on the front month and second month, and he wants to know what these numbers are referring to. A couple of people have asked about this. What those are actually, Don, is my show notes that we write up for the show. We put a bunch of data points in there. We put data points, obviously, showing how far the cash is from the front month and the second month of the VIX future. So we have a nice, easy reference point for how that curve is looking, the front portion of the curve in particular. Those are usually for our use on the show. Every once in a while, they seem to sneak out onto the website. And you're right, they don't make a lot of sense outside of the show itself. Out of context, they don't make a lot of sense. So if you're reading that, don't worry about it. But yeah, that's what that is. That's just kind of our reference points. When we're cranking through a lot of data, a lot of numbers on the show, it's nice to have a nice, easy reference point, and that just shows us exactly how that front portion of the curve is lining up. So for all of you out there who were wondering about that, there you go. Let's see. We got time here for one more. Let's try to find a nice, quickie one. People are asking about big short interest in VIX. Yeah, that takes a lot longer. Here's a crazy long one. Just looking, there's so many long ones. Here's just do a quick one. This one came in, I think, a live chat, probably a show or two ago. We didn't have a chance to get to it. It came from VTrader 168. He said, while VIX was at a historical low at the time he wrote this, probably a couple weeks ago, the no VIX future was still staying high at 1620. The no VIX was approximately 15.7 on the 1st of May and 2nd of May. So the term structure is relatively steep. Any implication, we talked about that before on the show. We had the Thompson boys on not that long ago to talk exactly about that, kind of that evolution of the front portion. A lot of that is just, we said it before, these futures can only get down to a certain level. People won't crush them that much below it, and yet the VIX cash has kind of a mind of its own. It can drip below 10. It can drift up to 13 in the course of a week. A lot of that is driving that steepness of the term structure. So I think we've hit on that a lot already on the show, but good question there, Mr. V-Trade. Unfortunately, it's all the time to go. We got to get into our crystal ball so we can all be roundly embarrassed again. Yes, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we all realize just prove how slippery that VIX pig really is to wrestle and get a hold of. He's a slippery one. Had a good year last year. I think I won pretty handily. This year, I don't know who's in the lead. That was Russell's job to keep that. I'm probably going to guess me, maybe Mark. Mr. Rhodes has been buying a lot, so probably not. But this week, not that good, really, for any of us. It was looking a lot worse yesterday when it was around 12.5, 13, because we were all fading this near-term rally pretty hard. We didn't think non-farms was really going to pay a lot into the equation. It was coming off a holiday week. We thought we'd kind of be in the doldrums. So we were picking lows. Mr. Meatball's around 10.05. Kept that pick for the last, 3 weeks. Mr. Rhodes, uncharacteristically low, 10.25. Me, I was on the dark side, 9.85. All of us well over a handle and actually, Mr. Rhodes was the closest. He was about 1 1/8 off handles. So I guess that means he gets to go first, or if he wants to pick someone else to go first, I shall allow you to have that privilege, sir. The floor is yours.
I thought I guessed 11.23.
No, you guessed 10.
Are you sure you don't have the numbers from 2 weeks ago?
You guessed 10.23 because remember Mark was mad that you kind of carped him to the upside by like less than a quarter.
Right.
Oh, okay.
Yeah, I remember.
Right,
that.
well,
I remember you carping me. I do that part. I remember specifically.
Bloop, 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 bloop. Hey, next week we've got J.P. Morgan, Wells Fargo, and Citibank all reporting Friday before the open, and I don't have high hopes for those guys. So I'm actually, I think we're going to push VIX a little bit higher. Maybe I'm going to say 11.99.
Wow, 11.99. Getting back into your old ways. So this is the VIX of the VIX. This is the Russell I've come to know and love. This Russell picking historic lows in the VIX and 10 handle. I don't know who that person is, but now Russell picking a couple of handles north. That's actually not a couple of handles. That's only about a half of a handle, a little more now. That's the Russell I've come to know and love. Mr. Meatball, you were next, quote-unquote closest. None of us were close. So you get to go next, sir.
Yeah, Russell, I would like to know what Lauren's pick is for VIX next week. What does she think?
No, let's go ask her.
All right. And in the meantime, hey, what did I guess last week?
For the last pretty much month, you've guessed 10.05.
Okay. Let me think. Let me look. VIX is 11.34 right now. So I'm going to guess 10.05.
How did I know that was the limits of your analysis, sir? Killing me here. All right. Well, yeah, that doesn't give a lot of fun to go into the high single digits, even though I'm not feeling the vol that Mr. Rhodes is. Very rarely am I ever feeling that much of vol, but I am feeling. I don't think I'm feeling single digits next week. That's for sure. I'm gonna go. Since Meatball keeps crowding that 10 handle, I'm going to go north of that. I'm going to go 10.60, 10.6. All right. With the picks in, that means we've come to the end of yet another scintillating episode of Volatility View. That means that music means, of course, we got to get rolling. If you're listening out there, if you're joining us live, stay tuned. We'll be back in exactly half an hour for TWIFO. You can even stay in the chat. What we'll do is we'll beam some nice options news rundowns in there for you. Keep you nice and active and get you ready to talk all things commodity vol in just a few minutes. But before we go, check back in with my cohorts, my partners in crime. Let's turn the table. Let's start with you, Mr. Meatball. What's cooking in the land of Carmen Lyons / option?
If you have interest in volatility exposure, come visit us at CarmenLionCapital.com. And if you're a qualified investor, now the big thing we have, we're going to be doing our next webinar on the dark side, being long Qs, how to hit these long Qs and not have to pay for it. It's going to be Saturday, July 22nd. We will have the go to options.com class long gamma to sign up.
Is that the proverbial get your juice for free Andrew webinar he's been talking about for so long?
It is. We're finally going to do it.
He's been threatening to write that book for about 5 years, so at least he should have a webinar ready by now.
We are going to have it. It's done.
There you go. Get your juice for free over there at optionpit.com. Maybe while you're there, you can also take the master class. You too may become a master. All right. And last but not least, Mr. Rhodes, what's cooking in all things CBOE? You guys got a lot of stuff coming. You got Apron listed on Monday. You're off all over the place looking at interesting new products and trends and things. What is cooking over there, sir?
I'm going to do my mid-year review on Wednesday, July 12th at 3:30 p.m. Talk about all the exciting things in the volatility world. I'm going to see if I can talk about being short volatility for 45 minutes straight. But we're doing a webcast on Wednesday.
And they go to cboe.com to find that, or is there a special link to that, or?
Yes, you can find that, or I'll be tweeting the link out too.
All right, find that link. Follow Mr. Rhodes over there on Twitter. If you do not, he is Russell Rhodes. Hard to spell, a lot of letters, I know. Or just follow us at Options. We'll retweet it for you. And that'll make life even easier for you. Head on over there while you're there. Check out some of Mr. Rhodes and his team's edumacation over there at the Options Institute. Maybe you want to get some learning on about this VIX thing. Maybe you want to take your granny in for a class about selling VIX. They'll teach you that over there at the Options Institute. Find out more over there on the old website. On behalf of the Meatball and Mr. Rhodes, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, streaming live, asking such great questions, all the great stuff you guys do. We'll see you next week. If you're live in the chat, don't go anywhere. We'll be back in about a minute or two with some ONRs, and that'll carry you all the way through to 1:30, where we come back with some nice, juicy commodity vol, courtesy of Twifo.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.